Hey, it's Clay, and this will be a video chart on ticker symbol HYRE. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like several days worth of time, it's actually just today's price action broken down into 30-minute time slices. I like to this time frame. I think it's a good job of telling the quote-unquote story of the price, and then makes mapping out levels of support and resistance a bit easier to see. Now, in this situation, this chart is pretty sketchy. It's hard to say, is it bullish, is it bearish? And a lot of that depends on perspective. A day trader is going to have a much different viewpoint than somebody that was going in that cared more about the long picture. But the one thing that I think can help everybody out is this level right here at $2.90. Why is $2.90 important? Well, let's take a look at a couple different possibilities here going forward. Let's say that the price goes down to $2.90. And after that, breaks to the downside and just keeps on, moving to the downside. What is that doing to the price at that point in time? That would literally be putting the price right back inside of that range that it just broke out from. Not to insult your intelligence, but price movements that go back to where they were, not exactly a sign of true strength. And in that, point in time, that would be a full-blown pump and dump. Because, yeah, there's no doubt about it. The price made a great move today. I mean, the price gapped up. And then even after the gap up right there, it continued to move all the way as high as there. And then it started to pull back. And yeah, you could say, well, look how deep that pullback is. And yeah, like I said, that's why things are sketchy. But let's say the price actually does something like this. Goes sideways and then starts to work its way back upwards. Well, now from the big picture, and to be fair to the bulls, you'd have a set of lows there. You'd have a set of lows right there. If you picture each of these as stair steps, well, hey, now there's at least stair steps progressing in the upwards direction. And overall progress being made is, a sign of overall bullishness. Again, if you're a day trader, I get it, and you bought right there, you don't care about these stair steps. So I'm making these comments based more so on someone that cares about the big picture of things. But overall, the moral of the story here is that $2.90 is going to be kind of, the vocabulary definer, meaning is the price making progress or is the price going back? Right now, those are just sound bites. Well, what qualifies as going back? What qualifies as making progress? Well, that's the great thing about charts is they allow you to quantify that, and I am quantifying all that as $2.90. So yeah, the price, if $2.90 collapses and the price goes below there, at that point, this thing's a full-blown pump and dump. But if the price can stay above $2.90, that would represent some progress from the big picture, and who knows, maybe the bulls can start to build upon that. But yeah, $2.90, definitely a very important level. One of the biggest questions that I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together a free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then click on the image that is up on the screen right now and I will email you the guide. The guide itself is very short and to the point, and best part, it's completely free. Thanks for watching the video. Let me know if you have any questions.